Okay, so this time we're live, I guess. Okay, hello everyone. Great to have you all here. We're joined by quite a company today. My name is Maria. Nice to meet you all, and I lead Brightpool's communication. And let me introduce my guests today. We are joined, first of all, by two guests from Redstone. We're here with Matt, Redstone's growth lead. Hello, Matt.
Hello, everybody.
And with Alex, the Oracle lead developer at Redstone. Hello.
Hello.
And we're also joined by Kacper, Brightpool's product ambassador.
Hello, everyone.
And last but not least, Lucas, Brightpool's pool master. Hello, Lucas.
Guys. Hi.
You join us from New York City. You're at the mainnet event, but I guess it's starting tomorrow, right?
Yeah, exactly. Today is the registration. There is the opening party. Everyone is preparing right now. I wanted to handle the AMA from the conference venue, but they are still with the boxes and it's mess right now. So real party start around 6 p.m. and tomorrow is the first day.
But I see you're already like getting ready for a party.
Yeah, definitely. You know, I'm crypto Dejan, you know, full spot, you know.
Awesome. We hope you're going to have like lots of great meetings there. But it's great that you found time to be with us. And today we will be talking about the oracles in DeFi and why they matter to Brightpool. So let's have a quick intro about the project because not everyone might be familiar with both Brightpool and Redstone. So let's start with Brightpool. Lucas, can you give us a quick intro of the project?
Sure, of course. We build a new type of DeFi trading platform which is based on the cutting-edge model called proof of bid. It's the model we've invented, in fact. So we pay rewards for orders, cut fees, trading fees to zero, and pay stable coins and Ethereum for staking our token. And thanks to the Nobel-winning Black-Scholes model, which is the core and the root of our business model, we solve the problem of inflationary staking and lack of real revenue in DeFi protocol. In fact, we take options as a financial instrument, simplify them to the maximum, making them accessible for the massive users.
Totally. Great. Matt, what about Redstone? Can you give us a one-liner about your project?
Okay. So we are Redstone. We actually are building two projects. One of them is oracles, and this is what we are going to be talking about today. And to give you a one-liner, so we are building a next generation of blockchain oracles, providing unparalleled scalability at a minimal cost.
Okay. Well, before we move to talking about the oracles, there will be like lots of interesting things. We'll also be talking about security. It's a crucial thing in the space. But before we jump into that, I just wanted to briefly touch on the latest series of events. And I wanted to ask you guys to comment because there was a lot of going on in the space recently. This month, we've been observing a series of accidents where the users actually benefited from the errors on the exchange side. We've seen Crypto.com accidentally give a woman $8 million. We've seen Coinbase users make 100-fold profits from a bag. And then Binance accidentally sent out something like $19 million worth of Helium tokens to the users, right? And all because of a bug in the accounting system. And then last Sunday, we also GMX being exploited by one trader, right? And this time, not only GMX suffered, but thousands of GLP token holders. So, Lucas, what's your take on this one? How can Brightpool and their users be protected against such situations?
Well, just a general comment. I think that that type of situation will be always the case in DeFi in crypto space, as long as we are decentralized and the smart contracts are open and everyone can access them somehow. And this is like a free trading. There's like a free trading market that things can happen. So how we can protect against it came down to the robust business model, like GMX case, they just use let's say arbitrage kind of like an arbitrage opportunity inside of their platform, and someone exploited it. So it means that you have to spend a lot of time and you make a lot of effort to analyze how exactly your business model works, what kind of trading possibilities you give to people, and make sure that you're actually protected. So I think it's a good place to remind the Luna crash and the UST crash. It was done due to the possibility of lending, like they failed on lending. In fact, when you introduce lending, then you should be very cautious and think deeply what are you doing, as we all know that we have now flash loans. So thanks to the flash loans we can do several operations in one transactions of blocks. So that gives you possibilities which were never seen previously in financial markets. So it just comes down to the robust business model. That's why we based our platform on Black and Scholes model, which is it's invented in 70s, Nobel Prize in 1997. It was really stress tested, like hardly stress tested, and now we rely on that. So that's one thing. That's one way how you can protect against the type of thing. And the other thing is just testing. That's why we will give the platform first for traders to test it, to play with it, and that's why we make our internal testing, kind of like a Monte Carlo simulation. How does the platform will behave in different type of scenarios. And right now on the market we have many let's say platform likes, for example, Machination, which allows you to build your business model, your tokenomics, and just play around with it to see how does it works. And that's the things you can do to protect yourself.
Yeah, I'm really happy that you mentioned that we do a lot of testing, that's actually the way to protect the platform, protect the project. And that's actually a good answer to everyone in our community who's asking constantly about the testnet. When testnet, right? Well, as soon as we're ready. Even with the testnet, you got to be prepared, double tested. Okay. I see that we already have quite a few people here. Hello, everyone. It's great to see you engaged. We're waiting for your questions, so feel free to write them wherever you're watching from. We are live on YouTube. We're live on Twitter and Discord, so you can ask the questions wherever. That our team is on every channel, so we will pick your questions up and drop them here. So I guess we'll definitely answer, or at least try to answer every question. Okay, but first let's start with a brief intro. We're talking about the oracles. Matt, can you tell us what oracles are?
Sure. So there is one important characteristics of blockchains that you have to keep in mind while talking about data applications in the blockchain context. So basically, blockchains operate in echo chambers, so isolated environments. They are not able to natively communicate with the outside world. And by communicating with the outside world, I mean fetching the data from external data sources. Because, for example, if we wanted to make the range of possible use cases of blockchain broader, then we should definitely implement some connection with the outside world. For example, if I wanted to build a DeFi protocol that's built on the price of oil, I would need the price of oil to be pushed onto blockchain somehow. But it's not possible to do it with just the blockchain. And there's a couple of reasons behind it. So, because the obvious solution would be to try to connect the blockchain directly to external API, fetching the price of oil, for example. And it's not possible for a variety of different reasons. For example, the fact that blockchains are deterministic. So this basically means that for a given set of inputs, the set of outputs has to always be the same. So in case of the validation process, if the blockchains were connected directly to external APIs, it would make it pretty much impossible for the validators to actually validate the blockchain, as they would be calling the API at different points in time, with the same outputs, with the same inputs, they would be given different sets of outputs. So it would undermine the validation process altogether. Also, blockchains are decentralized. So if we wanted to rely on the external APIs being up and running all the time in order to make the blockchain work, well, then we would have no decentralization at all. And also, by limiting the number of moving parts in the blockchain context, we are making sure that the whole ecosystem is as robust as possible. So the inability of blockchains to be connected to the external data, to the external world, is called in the blockchain space the oracle problem. And basically, you can think of an oracle as a piece of middleware that stands between blockchain and everything that's not on the blockchain, and allows for the data transfer from the external world, pushing the data directly on chain, while remaining decentralized and safe.
And can you give us some examples of how oracles can be used in DeFi?
Sure. So basically, what I like to think about oracles is I like to look at them as the enabler for DeFi if it comes to use cases. But in general, there is a couple of most prominent use cases for oracles in the blockchain space right now. For example, if you have ever heard about something that's called lending markets, so those are the protocols that let you borrow X amount of tokens on the condition that you submit 1.2, for example, X amount of another token as a collateral. So you always, in dollar value, you always borrow less than you put up as a collateral. And basically, those protocols need to be insured against the negative price action of the tokens that are put up as a collateral. So in case that the price of the collateral goes beneath certain level, the oracle should inform the protocol about this event as soon as possible, so that the protocol can liquidate some of the loans that could go underwater otherwise. So the oracle is like is the messenger of price in this kind of context. Another interesting example would be synthetic assets, understood both as bridging one asset from one blockchain to another blockchain. If I wanted to build a token that's based on ETH or the price of ETH, but operating on Solana, then I would need an oracle in place to be able to connect those two blockchains in the data context. Or also real world assets. So the price of oil, for example. If I wanted to build a token based on the price of oil, then the oracle would work as a bridge between the blockchain and the external data sources fetching the price of oil.
Okay, great. Quite many details. Now, some people say that oracles are either fast but insecure or secure but slow. Is that true?
Let me answer this question, because I would disagree. Firstly, because you definitely can create an oracle which is slow but also is not secure. And the second part of this is that it's actually possible to create a fast oracle which is secure, and this is what we actually are doing in Redstone. We try to create quickly updating oracles, but in secure and decentralized manner.
Okay, so if you were to tell me the most unique aspect of Redstone, what would that be? What you've just said, or what would you add to, what does Redstone bring to the table in terms of disrupting blockchain oracles?
Sure. So we try to focus on several problems that we see in the oracle space, but the main one is the scalability. The common approach for oracles is that some specified set of trusted data providers, which have some economic incentives, collect data from different sources and publish this data on chain. And this is the main place which we try to change, because we actually want to switch this obligation of pushing data on-chain from data providers to the end consumers. So Redstone data providers only collect data and sign data using their private keys. And then this data is being broadcasted, and end users can actually push data on-chain themselves. And this switch, this kind of new approach to oracles, really changes the game, because then you can provide way more data, way more trusted data, because data providers do not need to pay huge gas costs for pushing data on each target chain. So they can provide just more data feeds. This is the first thing. The second thing is that they can update this data way more frequently. So instead of 10 minutes, which is kind of a standard with other Oracle solutions, we can update data every 10 seconds or even more frequently. And the third quite nice advantage of this approach is that the data becomes available on any chain, because users can pull the data from our data layer. It's also decentralized, but it's way cheaper than blockchains, because it's used only to store data for some small period of time. So yeah, users can query the data on any chain and attach the data to the transaction on any target blockchain, and the smart contracts on the target blockchains will be able to verify if the signature is valid, if the signatures were created by really trusted data providers, if the timestamp of the data is not too old, and then if everything goes right, the data can be used by the end smart contracts. Yeah, so as I've mentioned, there are three things. The first one is scalability, meaning like just way more data that can be provided by Redstone oracles. The second one is data update frequency, which can be way more frequently updated. And the third one is the cross-chain availability. And this is also a very helpful thing, because there are a lot of different target blockchains today, and it's just convenient to have this ability to use trusted and high quality data on any of them, because there are numerous use cases where projects just try to build their own Oracle solutions, which are not secure because just Chainlink is not available on their chain. Yeah,
and how is the market reacting? Have you spoken to your competitors? Have you seen their reaction to what Redstone brings to the table?
Yeah, of course. Like, we're very interested. Like, we also research the market all the time. We try to actually focus on the pain points. So I think we even are not kind of competitors. We just try to improve the space. We want to make more use cases available. So for example, Chainlink is very secure and does a great job on providing high quality data, but for a very limited amount of data feeds. We want to just provide more use cases, bring more use cases and make them possible for the DeFi space, which we believe is quite important. And also, like, there are some use cases that are not possible because of the Oracle limitations. For example, with the update frequency. For example, synthetic exchanges actually would be killed by arbitrage opportunities if the Oracle data would be delivered every 10 minutes for them. So usually they also try to build their own Oracle solutions. So we just want to make more use cases possible and create a solid protocol with solid economic incentives. I can also tell a bit more about economic incentives in our protocol, but yeah, this is our main goal, to
just to add to that, because I was actually surprised at how collaborative the Oracle space is. So we often talk with other Oracle providers. We have like Telegram chats and whatnot, exchange knowledge. We meet on conferences, and we are not hostile to each other. We're trying to solve the same problem, because all in all, the Oracle problem has not been solved as if for now. Even if somebody says that their new solution is going to solve it, it's probably not going to do that. So there is still a lot of room for improvement in that space. Everybody knows that, and hence we also collaborate a lot.
And we wish you the best, because we are also all into like building fundamentally and solving DeFi problems. So we're really happy to be cooperating with you. We'll talk more about cooperation later. We'll talk more about the security in oracles later. In a moment, we'll also get down to the questions that we see coming up. But before we do that, Lucas, can you tell us now, why does Brightpool need an oracle?
Sure. So we need an oracle for price settlement, simply speaking. We are not like DEX, like regular DEXs, for example. Like we don't have liquidity pools. There is like the price of the token is not dictated by the ratio of two pools. So when someone places the order on Brightpool and the settlement is like the day after, or I don't know, week after, we need a reliable data feed which will tell us what exactly is the price right now. So that's when Redstone come in place. So the one thing which I should tell when you ask me the first question, how we can make our Brightpool resilient, I would say that by choosing a proper Oracle partner as well, because if that data feed will be improper, for example, if someone manipulate the price of Ethereum, would be able to manipulate the price of the Ethereum at the moment of settlement, the person could place the order, manipulate the price, and get free rewards. So, like this is for us, it's very significant that we have a strong partner which will give us reliable data feeds.
I believe you have just answered one of the questions from the community, what data Oracle will provide to Brightpool. So thanks very much for that question, and I believe we can move forward. Can you please pop up the next question? What else do we have here? Because I think it's the right time to start answering. Okay, a quick question. How confident are you that your TradFi tested model will work in DeFi? I believe that's the question to Brightpool, and that's the question about the Black-Scholes model. So, Lucas or Kacper, would you take that one?
It's nice question. I like that question. Very challenging. So let's put it like this: from the Black-Scholes model perspective, we are very confident that it will work. Black-Scholes model is constructed as a zero-sum game. And it was like strongly stress tested, and it doesn't matter whether you will use it for a DeFi, for weather forecasting, for insurances, for trading gold, oil, or whatever. It just works in options and in derivatives pricing. That's it. And now just so and it just comes to the implementation. So let me explain how the Black-Scholes model is implemented in our exchange. So what we do, we use the Black-Scholes model to price the orders, and with use of that model, we calculate trading rewards. Yeah. So whenever someone places the order, and the reward is calculated, and it's calculated with use of that model. So you can say that people who trade on Brightpool issue options. They are like options issuers, and we calculate premium for them, rewards. And this is like one side of the Black-Scholes equation. Here we have the sum of the premium that we've paid to users. And on the second side of the Black-Scholes model, we have the revenue, which you can make thanks to the order settlement. And those two sides, like the premium you paid and the revenue which you will take, are equal according to the Black-Scholes model. That's how they calculated it, and that's how they created it, and that's why they got the Nobel Prize for that order. So, so long term, the amount of paid tokens will be equal to the revenue which we will make. That's how that is constructed, and we're pretty confident that it will work this way. In other words, you can say, and the Brightpool will have spikes of the revenue. Like the highest revenue will be in the moments of the high volatility. And before we started constructing that exchange, we came to one university which is Poznań University of Economy, and we asked them to analyze the volatility of Bitcoin and Ethereum and to check whether there is like enough of the volatility to make the long-term profit. And the result was that the periods of the low volatility on Bitcoin and Ethereum, which are strongly correlated, in last 4 years that was around like 3 or 4 weeks per year, which can possess a threat for Brightpool, because the hardest scenario for Brightpool is the low volatility periods, but we have solutions for that. And the solution for that is the reward ratio. So we have the special indicator for the reward, which we will pay for the orders. And maybe I will let the Kacper speak about it. How does that work? Because that's kind of like his idea, and he constructed that part of Brightpool business model.
All right. So I would like to maybe go back to the question, because the answer is really, really long. So Maria, would you like me to focus on what like exact part of the question?
Let me maybe, Kacper, just add, like, low volatility periods, we can if we have low volatility periods and the volume is low, we can pay higher rewards. And if you just could explain,
yes, sure. All right. So sorry, it's late here, so I was just hearing. So yes, actually, our model is built in a way that it doesn't matter in what direction the market goes, and what is important for us is the volatility of the market. So the higher the volatility, the higher the revenue. What is important for us is basically the difference between the price that the options are being put. In simple words, it means that if you want to buy or sell, the higher the volatility, then the higher the difference between those prices and the higher the revenue. And it basically benefits the whole ecosystem of the Brightpool.Finance. One is the staking that we have, and as a part of the revenue goes to the staking. Other is just revenue that is supporting the Brightpool itself and our treasure pool. And the most important is the revenue that we as protocol earn is backing the value of the tokens that we give to the users. So what is very important to understand is that the tokens that we pay and money that we pay to the users is not being taken from out of the thin air, as I say, but basically it's being backed by a true value. So I believe this should answer this question in simple words and not getting deeply. So just get what is important: the higher the volatility, as now, it's the better for the users and for the Brightpool.Finance.
Great. I see we are having like lots of new questions coming up, and many of them are not quite about the oracles, which is our topic for today. Let's answer them briefly, not to leave the people without any answer. And let's maybe turn right now to Redstone. JD is asking a question that you probably never heard before. Are you a competitor for Chainlink?
Yes, probably this is how are you different to Chainlink, and are you a competitor to Chainlink is the number one question that we get asked often. But in general, we don't see ourselves as a competitor to Chainlink because there is just so many blind spots on the market that Chainlink or other Oracle providers are not covering. So we are not fighting for the same kind of market. And what I mean by that is, if you build a protocol or a project, and if you are okay with having only the price data of the top cryptocurrencies, the biggest assets in the world, and if you are okay with having it injected on chain every couple of minutes, and if you are building it on a major chain like ETH mainnet, then probably Chainlink or other major Oracle providers is the best way to go. But if you're trying to build something more sophisticated, for example, you want to build it on a test net, on a lower or like smaller market cap L1, or you need some non-standard data, you needed a lower latency. That's where you have some problems with that. That's where we come in, and there is a lot of demand coming from those areas of the market that are not covered by other Oracle providers. So we don't have to be a direct competitor. We can just focus on those areas of the market, and they are not niche by any means. They are real big problems that are not covered at this point in time. And this is, I believe, a great chance for Redstone, but obviously for everybody who's willing to build a new Oracle provider. I believe that we are at the day one of the Oracle journey, the journey for the whole market.
Great, awesome. There was also a question about what makes Redstone stand out from other such projects. I believe we have covered that quite well before. Let's move forward. There is a question. If we can ask you guys to ask questions and specify whether it's a question to Brightpool or Redstone, as it's not always clear. There is a question from Zain. Can you tell us the follow-up development plan and future goals of your project? So I think it's an interesting question for both projects. Let's cover it quickly, as we would like to get back to talking about the oracles soon before we finish, and we also don't want to take too long. But let's cover the question briefly.
Okay, so who should start? Maybe Lucas, do you want me to start about the Brightpool?
Yeah, go.
All right, so I'll try. Development is always, plan is something big, but just keep it simple. Right now we are finishing the MVP, and proof of concept is already done. We are finishing the smart contract audits. We prepare for testing, launching the testnet, and then going live with our product. And the next steps, I would say, the milestones are acting as a plugin for different DEXs and just going worldwide, because our engine is quite unique. So we want to also be used as the, let's say, API or a plugin for different partners that we possibly can cooperate with. For example, external DEXs. So this is one. And another thing that we consider is going multi-chain to reach the users on, Ethereum and other chains that besides Polygon could bring benefits. But this is something we consider. We have to see where is the best place for Brightpool. Maybe this is just Polygon, but maybe other. The crypto is changing. We are waiting for. We just had the merge. Maybe there will be sharding, and so I would say that's our main goals. Łukasz, would you like to add anything important?
Maybe just the one thing that right now you can place the orders like the MVP version and the first version of the platform at Brightpool will be with the placing the orders, but the next feature which we will add will be possibility of price booking. For example, you will be able to book your price of Ethereum. Assume that you would like to have Ethereum in 7 days. You would like to buy one Ethereum in 7 days for $1,000, for example, or you would like to sell it for $2,000 in next 7 days. That you will have such a possibility to do the price booking, and for that possibility, you will need to pay a booking fee with the BRI tokens. That will be one of our next features, which we will introduce after the platform launch.
And what about the development plans of Redstone?
Yeah, so
Alex,
we are also.
Could you update us on the product side?
Sure. So we're also launching the testnet. It should be launched in mid Q4 this year. We actually launched kind of almost production version in the beginning of this year, but we came to the conclusion that the security level was not secure enough because we didn't have the on-chain aggregation part, where we can aggregate data from multiple providers on-chain and verify and require some number of unique data providers on chain, which is quite important. So we focused on this, and now we are launching testnet with this on-chain aggregation and correctly specified economic incentives for data providers. And the further plan is to just integrate, improve the protocol, monitor it during the next following months, and integrate as many projects as possible with the testnet Oracle network. And the really long-term plan is just to build something that improves the scalability even more. We researched quite extensively threshold cryptography and off-chain aggregation for this. And this sounds like it looks really promising in terms of scaling, because threshold cryptography actually does real magic, and it can be really, really useful for Oracle space as well. So this is our plan.
Looks like lots is gonna be going on the Polish scene, and not only Polish scene. Great. There is a next question from, it's gonna be hard for me to pronounce, Asasadik Tahir. Hopefully that's the right way to say your name. Have you been audited? Also, how the normal crypto people will get advantage from Brightpool.Finance? And will be there any documentation or tutorial for understanding how to use Brightpool.Finance? So let me take the second part of the question very briefly. Obviously, there will be documentation. There is already a tutorial on how to use the testnet on our Medium, but there will be more. There will be video tutorials. Obviously, before testnet is on, you will have everything that you need to be able to understand it. And Lucas, do you want to take the first part of the question? How the regular
Sure, with a pleasure. I love that question. How normal crypto people will get advantage from Brightpool.Finance? Okay, as Sadiq, it's imagine that you want to buy that. You think that now Ethereum will dump, and you think that it will dump down to 1,000 USDT, and you think that there is like a resistance level, and that it will go to 1,000 USDT, and from 1,000 you expect to pump it once again. So what you can do, instead of just placing the order on Binance or whatever, or just buying it on the Uniswap, you can place that order on Brightpool, and you will have a possibility to get the Ethereum for that price, and you will get additional reward for that. So instead of paying like a fee on Uniswap or fee on Binance, you can get Ethereum for $1,000 and get additional $50 or something. It depends on how much you are buying as a premium for placing the order. That's how you can benefit. And the opposite, the same. So you bought for 1,000 and you expect, okay, now it will go up to 1,300, and probably there is a resistance because you have your levels from technical analysis or whatever, whether you believe it or not. Let's assume that you do. So then you can place the order to sell Ethereum for 1,300 and get the premium in BRI tokens as well. So that's how you can benefit. Instead of selling and buying, trading on Binance, you can trade on Brightpool with additional profit. And then when you have your BRI tokens, you can stake them for staking cycles and receive the USDT Ethereum as a staking rewards. So that's basically how you benefit. And when we will add the price booking feature, there will be another possibilities, but it works the same way. Basically it works the same way. So it doesn't matter whether you're a trader, hodler, I don't know, you're a speculator, day trader, swing trader. If you have your entry levels and the exit levels, and you should have, if you don't have, you should make sure that you will have them. You can trade on Brightpool with additional rewards in form of BRI tokens. So that's how you benefit.
Łukasz, I can maybe just add something really quickly on top of that. The other, let's say, point of view is that usually for average user, options trading is something that people cannot get very quickly, and this is just complicated. So what Brightpool is offering, and that could be potential advantage over other let's say, option trading platforms is just the simplification of all the process and how it's happening behind the scenes. So I would say this is the advantage is that basically people, average users, could be using options and earning on that with a very simple interface that is unknown in the market so far.
All right. Now I'm really struggling to choose the next question, as there are quite a few. Quite a few regard staking on Brightpool, and I would really encourage you to go back to one of our previous AMAs that was strictly about the staking, so you can find out all the details there. And I would like to pop yes, Lucas.
Can I just one word, because there was question about audit and we forgot to answer it. So yes, we've been audited, like a token, a smart contract, investing smart contracts were audited by CERTIC, and we will be CERTIC and ISEC, two auditing companies, independent, and there will be the full audit of the platform in upcoming months.
Okay. Let's pick maybe a question to Redstone, and let's move back to talking about the oracles. And I want to make sure everyone that ensure everyone that all the questions that you guys asked that we won't be able to cover during today's live, we will definitely get back to them, put them into a one topic, and definitely there will be more AMAs from us. Where we can focus more on everything that you want to know. And for now, going back to talking about the oracles, there is a question from Nikos for Redstone. Will you charge for the use of your oracles? What are you going to make money on?
Sure. So our model of charging will be the following, that clients will pay, we will serve as a marketplace between data consumers and data providers. And data consumers will pay data providers to receive data, so that data providers have some motivation to do their job. We don't plan to specify some strict amount that we want to charge, but we have an economic system prepared. It's currently in kind of beta version, but basically it means that you can pay any amount you want, but depending on the amount of fees that you pay, you will have the different level of insurance in terms of incorrect data provided by data providers. So on one side, data providers need to pay a stake before joining Redstone protocol and starting to provide data. And this stake will be slashed or partially slashed in case of wrong behavior. For example, if they don't provide data or start providing wrong data, completely incorrect data, then the stake will be slashed and will be moved to the consumers that were that had problems because of this. So for example, if a group of nodes, a group of data provider nodes fail and provide wrong data, and several projects, several decentralized applications were relying on these data, then the amount of refund for each of them will be based on the amount of fees that they paid. So the more you pay, the more insurance you will receive in case of problems. That's the basic model that we're going to use. And the stake, the Redstone business model is based on the fact that stake will be paid in Redstone tokens. So that's the main utility of Redstone tokens, is to create this economic guarantee and economic incentive for data providers to do their job correctly.
And to continue talking about the Oracle itself, can you expand a little bit more on the security of the Oracle? What are the major risks that are out there?
Yeah, there are plenty of different kinds of risks in the Oracle space. I can quickly cover the ways that we use to prevent these risks. And the first one, and one of the most helpful things, is just aggregating data from multiple sources, as many sources as you can. And of course, focusing on reliable sources, focusing on attestating sources, to just understand what sources you can trust And sources can be anything. It can be APIs of some centralized exchanges. It can be on-chain data on decentralized exchanges. It can be commercial APIs, really anything. So the more trustful sources you have, the better is quality of your data. So aggregating data from multiple sources while you collect them is very important. And with this, we have about 50 different sources for the most popular tokens, and take the median value from all of them. But there are actually different ways to aggregate data, but currently we just take the median value. So to manipulate the value of the the aggregated value, you would need to attack at least half of the sources, which is extremely difficult. So this is the first thing that we do for security. The second thing is that we have this on-chain aggregation. So assume that one of our data providers decided to crash the system, but they will not be able to do this because we aggregate data from different data providers, and we require a specified number of unique signatures from unique data providers. So, for example, we require 10 data providers, and we take the median value as well. So even if 3 of them will fail and will provide completely incorrect value, it will not really corrupt the result, the aggregated value. This is the second thing. The third thing is the economic incentives, which I already was talking about, which means that data providers just are incentivized not to corrupt the system, because if they will lose their stake. So it's kind of similar to proof of stake model, and it's becoming more and more popular in the Oracle space, and oracles like UMA or Chainlink actually create something like this as well. Yeah, and this fourth thing is, as I've mentioned already as well, is insurance for clients. So even if system corrupts, users will still be refunded at some point. It's quite difficult to maintain the system which completely can refund and like can be 100 secure and safe, and it's really difficult to guarantee that users will receive 100% refund in case of problems, but at least we are trying to move to this direction.
Yeah, there are always lots of risks, but it's good to hear that you can manage the risk, right? Kacper, what about Brightpool? What are the major risks specifically for Brightpool if our Oracle was, let's say, hacked?
Yeah, that's a good question. Everyone here, Alex already said how important it is that the data that we get will be valid. So it's a bigger problem. Data manipulation is always a dangerous thing for distributed systems, and especially for the systems that make calculations based on the input data that they get from the third parties as oracles. So in our case, we could be hit in a couple places. This is something what Lucas already said. For example, when we settle the order, we check the price of the Ethereum, our main asset right now, and if let's say the input data would be manipulated, then it would mean that we could lose some money or calculate the rewards in improper way. So this is, I would say, significant. This could be a significant threat to us, and but like it was already said here, we also like the oracles are doing like 1, 2, 3, 4, or even more. I think counter measurements to make sure that the provided data will not be manipulated. So as well, we as Brightpool introduce several counter measurements to make sure that it won't happen. So it's something what Alex said. We also introduce, let's say, multiple sources of the input data, so we will not rely on one, as it will be just not smart just to rely on one that always could be manipulated. So and then we have another counter measurements that maybe I should not talk publicly, but just to make sure they work. But we know how important it is. and how we could get hit with data manipulation. So we treat this with I would say, as one of the highest priorities as a security threat for our platform.
If I may add one thing, we use oracles in two places. Kacper, correct me if I'm wrong. The first place is when we calculate the reward for order. So let's imagine that someone hacked, manipulated that value, like someone is placing the order to sell Ethereum, and the actual price of Ethereum was manipulated, and someone made that price, I don't know, few $1 million right now. So that would show that we have like a huge volatility, like enormous volatility, and the higher the volatility, the higher the reward. So it means that someone could manipulate the value of reward, and instead of getting like 200 BRIs, that person would get 2 millions of BRIs. So that's like the thing. So to avoid that, we do what Kacper said, eliminating single point of failure and things like it. So this is the first point. And the second point is that we use oracles during the order settlement. Here, if someone manipulated the price, it's not such a huge risk, but still it's significant. If someone manipulated the price here, the only manipulation which makes sense is to make the price of Ethereum, price of the assets, the Ethereum, like that, the order wouldn't be settled. What does it mean? That your order is not settled, it means you get the funds back and you keep the premium. So in that case, we are not losing like a huge stake of tokens, but we are losing the revenue of the particular order. So here it's way less crucial, let's say, because we only lose the revenue of one particular order. Still, it is important.
Okay, let's have one last question from the community, and then let's sum it up with the plans for cooperation. So the question from Tofun Miawe, and that's the question for Redstone. Do you have a maximum amount of funds you can use on the Oracle?
I'm not sure I completely understand the question, but I think it's about risks, which means like how much funds would we like to protect by our Oracle data. And the answer is we would like to start with smaller amounts and sequentially like grow, because it's also a good approach in terms of security, not to launch a system that was not tested right away on huge amounts of money. So it's difficult to specify the specific number, which is the limit, but we definitely would start with smaller kind of capital amounts protected by our Oracle data, and we will slightly increase it while testing the whole infrastructure and solution in progress.
Just to add to that, because I think it's a very important and interesting question, but for the whole Oracle space in general. So it's not only our problem to think about, okay, what should be the ratio of the funds that are secured by the Oracle versus the total collateral inside of the Oracle network. The whole industry, the whole Oracle industry is thinking about those things, because when you think about it, then okay, maybe this should be 1-to-1. Okay, we have X collateral, then we can safely transfer X amount of money through an Oracle network, because if something goes wrong, then we have the collateral for it. Actually, in fact, when you think deeper about it, it starts the ratio should be probably 2-to-1. So basically, when you can capture 51% of the Oracle network, then you can corrupt it. So only 50% of it is safe. But still, when you take into consideration algorithms like Byzantine fault tolerance and go into more advanced stuff, then it can appear that, okay, it's not 50%, but 33%, because of some consensus that's being created by this kind of algorithm and whatnot. So there are the whole industry is thinking about it. There are clever ways to actually go around it. But I think there is also a lot of room for improvement in this regard. And I believe this is a very exciting sort of area to be working in, because you have economics, you have game theory, you have technology, and the cross section of it produces those kind of super interesting problems that have never been solved. So I think this is a very, very important question in that regard.
I wish we had time to answer all the questions, but our time is almost up. Lucas, would you like to sum us up with our plans, how we're going to cooperate, what's our cooperation going to be based on with Redstone?
Yes, of course. So we cooperate as we've been discussing, through the whole AMA. We will use Redstone oracles for order settlements and for pricing the orders. That's the number one. And well, there is one more idea of cooperation, but I don't want to bring it right now. It's pretty advanced, and I would like to leave it for maybe another talk. And if we will be more advanced in the cooperation. But the beginning is that's it. So we find Redstone oracles as secure, as fast enough. One of the Brightpool goals is to provide the faster orders, like order settlement. Right now, the lowest time period is 1 day, but we want to go down even up to 1 hour, and then we will need very fast oracles. So that's kind of like we look into the future, like the way we're going to develop Brightpool, and the speed, the pace of Redstone will have a significant impact here. Yeah, so I think that's it.
Great, thank you so much. Would Matt or Alex like to add anything to that? Or do you think Lucas summed it up pretty well?
Yeah, I think it was pretty well, but I would just add one thing, because I forgot to mention it while talking about security, and I see a lot of questions about this. So yes, we are auditing our smart contracts. This is extremely important in terms of security, and definitely we have several independent audits, internal and external audits of the core pieces of our infrastructure, including smart contracts.
Great. There are quite a few questions more, but I believe we can also answer them in the comments. So please do not get discouraged if your question wasn't asked during this AMA. There will be more. We will be posting regularly on our social media. We'll let you know what the next topics are going to be of our next panels and AMAs, and who our next guests are going to be. Thank you very much to our guests from Redstone. Thank you very much for your time. And it was really great to hear about your project, to hear about your plans. And we definitely keep our fingers crossed that everything goes according to the plan for you guys, for our project. It's great and exciting times we're living in, and it's great that our projects are pushing forward. Thanks very much, and till the next time.
Thanks for having us.
Thank you. Thank you very much.
Thank you, guys.